Hello, good afternoon, everyone. Welcome to a midday market update for Thursday, October 20th of 2016. This is George Papazov, owner, founder, and head trader here at Trade Pro Academy. I want to remind you the information in tonight's presentations for educational purposes. It's not constitute investment advice. The risk of trading in the markets can be substantial. You should carefully consider if engaging in such activities suitable to your own financial situation. Trade Pro Academy is not responsible for any liabilities arising as a result of your market involvement or individual trade activities. All right, let's get started in today's broadcast. We got a lot to talk about. Let's switch over to the markets and look at some of the charts and talk about what we've kind of seen so far this morning in the equity market. So if you go on Thursday, October 20th, this is a chart courtesy of forexfactory.com. In terms of what's going on in the economic front, sorry, you got a distracted or hit the button. We had retail sales on British pound. They came out, or in GBP in Great Britain, they came out relatively flat. This morning, the big announcement came from ECB, the European Central Bank. Their minimum bid rate or their key interest rate, similar to what the Fed controls on the U.S. side. This is basically for the entire European zone, and Mario Draghi is the guy that heads it up and does the conferences. So they came out and said everything's going to be unchanged. They have three different key benchmarks and rates that they control. All three, they said, unchanged. That's what the market expected. More interesting was when he started the press conference at 8:30 in the morning. He was saying that by March of 2017, the current stimulus package have 80 billion repurchase to repurchase assets are going to go until then, through 2017 in March, and maybe even longer, he said. Basically, as long as necessary, he affirmed the neutral stance, and he said December they're going to discuss some potential either increases in stimulus or decreases or wind back that stimulus. There was an opportunity here for the market to go south and turn sour if he confirmed any, in the slightest way, if they had discussion to taper or cut back some of that liquidity. And there was rumors that caused the market to go down a few weeks back. Actually, last week, that was denied, and he didn't say anything about it in the press conference. Basically, I don't know what you're talking about. All right, so that it was a non-event. It caused some volatility to the upside and downside of a couple points here and there, but non-event. Really, Philly Fed manufacturing 830 was the big news, 9.7 versus 5.2, and that's a real positive for the economy. All right, you can see here, that's as strong of a number as we've pretty much gotten, the third strongest in all of 2016. Obviously, there's been much higher readings, which coincided with drops in the market, as you can see here. All right, but that's a good beat. We've kind of come out of this consolidation that we've had in 2016, the last little months, and we've just blown that out, and it's gotten strong. Okay, the interesting thing is the revision actually is lower than the previous. So let's see what it's revised to. But nonetheless, Philly Fed manufacturing comes out strong. Anything above zero shows strength and improvement in the economy. All right, so what did the market do? The market went down. All right, initially grabbed a bit of a bid in the morning, and then it went down as it just got peppered with some sell orders. We're going to look at that in a second. Unemployment claims came out slightly higher than expected. For the rest of the day, we really don't have much on the queue. In terms of economic news, what do we got going? We got some T-bills that have already been auctioned off. We got the U.S. Treasury's 30-year TIPS auction happening at 1 p.m. Eastern. Fixed income traders, you'll probably be watching for this very closely. Into the close today, we got some earnings from AMD, the chip maker, and Microsoft, and a slew of another whack load of companies here, at least 20 reporting. Not as many as yesterday, but still a ton of companies reporting after market hours. So watch for that. Those are going to be the big reporting companies. We have, what do we have here into speakers? Fed's Dudley welcoming remarks at the New York Fed hosted event at 8:30 Eastern, 9 Eastern. We had Fed Dudley as well. And that's all we have. Oh, we also have a speaker here in the Finance and Society, a Global Perspective Conference at 4:45 Eastern. So close to the market, or after the market close here. All right, that's kind of the stuff out of the way. I want to talk about those three things. It should have put some upside pressure in the market, and it didn't. What ended up happening is S&P 500 sold off quite a bit after these reports. You can see here 7:30. Here was 8:30. We saw some selling that got absorbed. Prices rallied for a bit of a stop run for the overnight shorts. And then we tried to give her again and break this 2130, and we couldn't. Selling got absorbed here. Now buyers are starting to peak back up. Full and fair disclosure, I'm currently short the S&P 500 on a 1 hour and a daily. Here's what I see. I see some overhead resistance. However, I have a really, really tight leash on this trade because it's got to go down. All right, we got to get some sellers to come in. It's having a really hard time getting above this 100-day moving average. Ton of offers on the upside. The sell book is really thick. And at this level, I've been waiting for this level all day to float a short. I'm short at the moment. Tons of support here, still acting as resistance. Might see some downside develop in the afternoon. But after some positive economic numbers, after last night's debate, it pretty much looks like Hillary Clinton will clinch that presidential nomination. We'll see. But volatility is starting to disappear, and this is what I want to talk about. October, from a seasonal market perspective, is traditionally the spooky month. Everyone's freaked out. Every trader was freaked out at the beginning of October. I guarantee you that much. End of September, everyone was walking on eggshells. We got a bit of a sell side or downside, but if that's all we got, all right, if that's all we have from the bears, if that's all they got to push us lower, then guess what? From a seasonality perspective, we're going to shake them loose on a giant stop run through November and December. In fact, we're getting close to the end of October, where mutual funds start to rebalance their positions and start buying into the dips. So they've converted to dip buyers once again. That could push us higher on the S&P 500. So you got to really be cautious for that. Really, it looks like the trading room here is not getting sound. 1 second, guys. I apologize. Let me try to do the following. Can you hear now? Uh-oh. All right, we'll deal with that in a second. All right, guys, so that's what we're seeing from seasonality. Here's some numbers for you. Through November and December, 72% of the time markets are up in a presidential elections year. So that's a really strong number. And in that time, there's a 2% gain, which would suggest the S&P 500 through the end of October, if we ended here right now, it should see what's 2%? Get us back up to some of these highs through the end of the year. You know what? It's not that big of a deal, to be honest with you. 2190. If we got up to 2190, the message will be clear. Sellers got absorbed. The buyers are in control. We could get through and above 2190 really quickly. There's a lot of buy stops waiting up here to squeeze out these shorts. I think the shorts are going to give it one more attempt from a larger overhead perspective, but they got to start pushing it right now. It's got to begin right now this time. And you can see buyers are already trying to get this 2144. Upside resistance is 2150 on the S&P 500 market, and it looks like some of the pressures on it to go down have been relieved. Hillary did really good with the debate. Donald didn't have a disaster. I mean, it's not done and set in stone yet, but rate hike looks like it's going to happen in December. Market's already priced that. 70% probability of doing a quarter point hike or more, and that's already been priced in. So a lot of the fear that comes with October is sort of off the shoulders. Barring any kind of massive drop, watch me end this YouTube broadcast, the market just drops, which would be funny, but that's how life works sometimes. So take that with a grain of salt. Watch the levels. 2160 to the upsides are resistance. Buyers got to get us there pronto. Sellers have to defend that level as quickly and as efficiently as possible if we get up there. 100-day moving average of 2140 is in play. And Barbara, did you get it to work? And that's what you guys need to be aware of. This Friday, guys, is options expiry. So I've been kind of beating this horse to death, but on Friday, so like Thursday, Wednesday, Tuesday, Monday, on Friday, I said typically from a statistical standpoint, Wednesday and Thursday form the lows the week before options expiry. And there it was. There was a low at 2113 on the index. That was on the Thursday. All right. Friday, we had a rally that got sold off to. Monday, I told you we'd be weak on the open. We try to push some of this range lower. And then Tuesday's a turnaround Tuesday, which means the bulls took control. Wednesday and Thursday, they followed through. But now it looks like they're running out of gas. So the story is last Thursday, Friday, that's a low. Options expiry is usually a positive week. So we could theoretically end the week at 2160 before we roll over bearish or run some buy stops to the upside. So I can't give you a definitive direction here, nor am I a guy that likes to give you direction, because if I say, yeah, you know what, I think it's going to go up, what are you guys going to do? Go start buying it and then leave comments in the box. Oh, that's a terrible trade. The analysis isn't bad. It's the execution that makes you money. No one's ever been profitable as a trader from being right in direction. All right, it's the execution that follows their analysis that makes them the money. Just because you say it's going to go up doesn't mean you're going to make money. In fact, even if I told you it's 2180 by the close of today, you still wouldn't make money if I said you have 2 points of risk maximum. Doesn't matter where you get. If it goes down 2 points, you're done for the day. And if I told you it's going to end at 2180, some people would still have a hard time picking location. So let that sink in for a little bit. That's what I'm looking at, the S&P 500. Let's look at oil very quickly. We're currently short oil as well from above. Yesterday, we sent out a note to our subscribers at about 52, where was that? 51.90 or so that we shorted. We pretty much got this high to a T. Inventory data came out, prices rallied, we shorted it. I still see some downside here coming in. Here's a 1 hour chart of oil. Sold off really hard. I mean, everybody was long. Everyone and their grandparents and their grandparents' friends and pets around the house was long oil. So I love taking the opposite end of that trade. Any day I'll do that. So when everyone was long, rallied upwards, good inventory data from the API at 4:30, the private subscriber release, and then we had really good inventory data again. That was a draw from the Department of Energy's report, and then that was the top. And down we go. I'm still holding this short. I'm going to show you where we could potentially get to. Let me flip to CQG, and let's go to. Here we go. Here's oil CL. Let me just pop that in here. Let it load up. Here's what I'm seeing on the oil front. All right. If you go in here and do a Fibo retracement, which is Fibonacci, if you don't know how it works, we made a really good video about it. It pins oil sort of as coming down below that 49. See this? That's the 38.2 retracement. That also makes sense for a lot of reasons, but be cautious because 50 will probably be a support before 49. So if you're targeting 49, 48, don't get too excited to kind of come in here and try to get that target. Don't just go to sleep. Follow this because 50 is going to be your first level. This volume cluster should hold a support. There's a lot of bidding happening in through this zone. If we crack this level, you got 49 on deck, 48 to hit this 38.2, and you're coming right in the center line of this consolidation and this one here. Let's go into look at gold, and then we'll call it a day. Here's the gold move. If you go on a weekly on gold, here's what I've been following this whole time. I knew gold was going to shake out loose. Been chomping at this bit for a while, squawking, saying, don't buy gold at 1,300. You're going to get burned. Nobody listens. What happens? Breaks 1,300. Prices drop after what? 1, 2, 3, 4, 5, 6, seventh time through. We're not going to hold the support. There's a misconception out there that the more times it hits it at support, the more strong of a support it is. No, that's wrong. It's the exact opposite. Third time, great support. Fourth time, great support. Fifth, sixth, and seventh, it gets risky. There goes all the sell stops that got triggered from the longs that got in at a crappy location and late. So that means the next level down as support is the next chop or 38.2 on the fibs down to a T. It stopped at 1250. All right, we got to get this rally trying to go and take out here. I'll show you what level I'm looking at here. 1289 or so. But remember what happens when a market drops like this and price starts to gravitate upwards. What happens? These people here that were long got stopped out on the downside. All right. And the people that shorted down here through the breakout, some of the smarter traders that are a little less reactive and more proactive, well, if they shorted up here, as the price gravitates upwards, they start buying it. There's a short squeeze. But as we start to approach this 1,300, there's going to be more short sellers to come in to try to push the price lower. So anything at like 1285, 1290-ish, even 1285, honestly, that's the upside target. There's some resistance up here. That's a fade. The trend looks like it might go down to the 50% retracement in this chop at 1220 or so in gold. So careful. There might be another wave down. What we're doing here is fading. We're not trading at the moment. If you want to trade a trend, you wait for a retracement and hit the bid here and sell the thing into it. All right, because the trend's starting to go down. There is a support line here, yes, but that support's also broken if you draw it properly, which I'm having a hard time doing. There you go. All right, that's gold. That's oil. We got S&P 500. Somebody's asking for the short-term levels. Here, I'll give you some short-term levels on the S&P 5. Let me just go to a 6 PNF chart here. And you can see a lot of upside. You know what I'm going to do? I'm just going to replicate this window and pull it over. And I'll show you some of the short-term levels, and we'll call it a day. All right, here's what I'm looking at. This is S&P 500. Oh, I want to show you one last thing as well. Here's the daily profile. You can see it's walked down and walked up. Pretty much day trader's dream today. I'll show you how you could have caught this bottom using ancillary and correlatory markets. Just give me a second. But this rip came upwards. Now your next support levels down are 36 to 38. A lot of points of control. 5-day POCs right here at 36, which means the price spent, it's 5-day average hanging around 36. Right above is today's POC, and yesterday's about 38. So 38 to 36 is an awesome support zone. If it holds, it should spring us higher to the 50s. If that breaks, watch for these 27s to break below. All right, that's all I got. Point of control, I talked about that. Options expiry covered as well. November, December stats we went through. I guess the one thing left to show you is what I was talking about, how you could have caught this bottom. Let me show you this. You know, a lot of traders get scared to catch bottoms on the market, and I understand that, but that's what it takes to trade the S&P 500. So I'll show you how to catch this bottom, and I pretty much did. All right, so here we go. Prices are coming in. Okay, here's my buy. Offered some, sold some. So I did a few trades at this bottom, but prices are coming in, and we're getting real weak at this 27 level, and you know that's the bottom now. So we have retrospect in our power, but you see there's rotations up, prices get hit down, rotations up, price gets hit down, rotation up, price gets hit down. Everything here on the left is aggressive selling behavior. Well, as we kind of hit this bottom and rounds out, there's no more selling. It's being absorbed now. Now it's starting to form a bottom. Can't push a new low. It's rotating. Buyers are starting to show up. Sellers are absent. You got all the makings for a stop loss run to the upside. Well, you need something to help you. What did I use today? I used the DAX. And here's the idea. The DAX at around, let me get a crosshair going. Oh, man, I told my fiance this would be a 20-minute update maximum. I think I'm right there now, and I still got a subscriber piece. Here we go. So price hits down here at about 10:30. Here's 11 o'clock bottom. You see 1, 2, 3 consecutive lows. DAX starts heading upwards. And in this entire move, the green line is the S&P. It broke this low, but the DAX, the red line, did not break the low. So the DAX was still open from 9:30 to 11:30 in the morning. That's the European-US overlap. Very volatile session. Most traders trade those 2 hours and make full-time income, then go on and do other stuff throughout the day. So what ended up happening, look, DAX couldn't form a new low. It started to bounce upwards. We started getting a series of new lows here, but each one of them was closer and closer together. DAX was already on an upward trajectory. So what I said here was, let's see for some support levels to hammer out. There was a support. Buyers started showing up. Bought it right here. It's the last trade that I did and held it higher. So what was my purchase? Around 28.75. 28.75 got long. What was my risk? Below 27. Big deal. That's nothing. That's small risk for huge potential reward. And what ended up following through? Stop loss galore from here. Whack one. Consolidation. Whack consolidation. There we go. From a 10 PNF for short-term traders, watch these levels right now. 21.40 and then 21.41 half to 21.42. That's going to be huge overhead resistance. Okay, so sell there. Above here, buy on retracements. That's all I got for YouTube. I think that's enough for free dollars. Have a wonderful afternoon, guys. Remember, all this stuff's at your own risk. Enjoy the market. Enjoy it responsibly. Manage your risk, and you'll get profit. All right, the more you chase profit, the more you're going to give it up. You're going to lose. If you don't focus on capital preservation and managing risk, you might as well just turn your money over to somebody else. Give it to your financial advisor. Heck, go to the casino and spend it. You'll have more fun than partying with it in the market. All right, all the best. Still looking to get short here. My short was 35.75s. I got squeezed out of that one, shorted 40s. Okay, guys, all the best. Have a wonderful afternoon. If you have any questions, let me know. Subscribe to our newsletter. Join our newsletter updates. It's every morning by 8:40. You get all this good stuff in your inbox. Become a subscriber and look at our live trades as well. And join for weekly live analysis every Sunday and midday updates. So for the subscribers, hang tight. I'm going to get with you in a second. We'll review all of our live trades and what we've done. For YouTube, adios. All the best. See you here tomorrow. Actually, tomorrow's Friday. We're taking Friday off. See you on Monday at 12:30. Take care, guys. Be careful out there. Remember, stats are positive. So if you're going to short small so you don't bleed out. All the best. Goodbye.